Hello and welcome to the Johnson Leadership Series. I'm your host, Jason Johnson, founder and managing partner of executive search firm Johnson. Today we're joined by Rob Coombe, a prominent director who has recently led the successful turnaround and sale of the Craveable brands business to Tibra Capital.
I never felt that I was defined around the industry I was in. I was always curious about how other businesses worked, and I really wanted the challenge of testing the skills I'd learnt in 30 years in another industry. So firstly, the 100-day plan, I know it's a bit of a cliche, but it's very important, I believe, because a new CEO coming into a business almost has the permission to actually get a lot of stuff done. Like people are waiting, they're expecting. So, it's a waste not to take advantage of that environment. And I spent the first 100 days basically out on the road speaking to franchisees, employees, suppliers, other stakeholders out there. First thing was, if you're going to do great things, you need a great team. So we needed to rebuild the team there. The second thing was to develop a vision for the business on where you were going to take it. Particularly with a franchise business, it's very important because you've got people there looking for direction. Without any direction, it's like herding cats. They're all off doing their own thing. So developing that, and then the third thing, I almost hate to use as a bit of a cliche, it's the old Jim Collins on the bus, off the bus. The first thing I'd say is I really like the model because I like the owners sitting at the table. You can make decisions very quickly and dynamically. It's a very stimulating environment. I do it again any day of the week. I think the main thing is to be very clear on what the owners are trying to achieve and what time frame they're working at, and then to build out a plan to that. We felt when we set sail, the asset was definitely ready to be sold. When we were looking to IPO it was at the end of generally the private equities holding period, which there's no fixed date, but it's generally 6 to 10 years in that zone. I think we were at the 6 or 7 year mark. Business was performing well, so we had a good management team in place. We felt we could tap into the public markets. We were actually approached by PAG, who were interested in, they've got a big fund interested in QSR assets and really liked what we were doing. And from Archer's perspective, it was probably a better outcome anyway, because it's what's called a clean exit, whereas an IPO is a little bit more complicated for a private equity firm.